Greetings everyone, and thanks for watching this video on support and resistance. Now, since this is a recording of a recording, the audio is a bit compromised. However, I believe it's more important that the info be shared with you than rather be shelved because it's slightly off the mark in the quality department. So thanks again, and I hope you find this information beneficial to your understanding of trading.
And I'm here to talk with you about how I use support and resistance levels in my trading. And the first thing I want to do is just go over briefly a little bit about what support and resistance levels actually are and how they are put in place. And on this first diagram that I have up here, you can see we have a level of support at the bottom and we have a level of resistance at the top with price action moving in between. Support is the level beneath which price has difficulty penetrating. Generally, support is going to be difficult for price action to penetrate, especially if it's been established for a while. Buyers provide support, I've written up here. What makes this support is at this point along this graph, there are more buyers than sellers. And as long as there are more buyers than sellers at this point, this support line will maintain its integrity. The opposite would be true up here. We have a resistance line above price action. Sellers provide the resistance. At this point, sellers outnumber buyers. And as long as sellers outnumber buyers and continue to do so at this resistance level, we're going to see this resistance line remain intact. Now, think about it this way. I've got written floor and ceiling here. Think of a large room. We've got a floor, we've got a ceiling. And let's say I take a ball and I just throw it in there as hard as I can, one of those super balls that bounces around like crazy, and I just throw it in there as hard as I can. This is what we're going to get. We're going to get this bouncing action between the floor and the ceiling. That ball represents price, obviously, in this case. And when a support and resistance level is attacked, if you will, by price action, two things can happen. The first one we see happening up here, where it hits support and it respects it and it bounces off. It hits resistance and it respects it and it bounces off. And so this is the type of line that we get. Now, the other thing that can happen is price action can break through to either direction. Price action can break above resistance. In other words, if there are more buyers than sellers at this level, that's going to cause price action to break through. If there are more sellers than buyers at this level, that's going to cause price action to break through to the downside. Well, when that breakthrough occurs, let's say it's a breakthrough to the downside, what's going to happen is this old floor, now that price action has moved below it, this becomes the new ceiling because it traded through the floor. This is now the new ceiling, or old support becomes new resistance. And the pair then has the potential to trade down to the next floor level of support, however far down that may be. And the same thing is true if we break through to the upside. If we break through the ceiling, the old ceiling becomes then the new floor, and price action can continue up to the next resistance level, up above. Now, before I get into my trading analysis, what I want to make sure I do with these support and resistance levels is to confirm them. I just don't want to see, one touch of price action at a certain level and then declare, okay, that's my support level. I want to see at least 1, 2, 3 touches of support by price and 1, 2, 3 touches of price at the resistance level. So now I know these levels are confirmed and I can use them in my trading analysis going forward. One of my favorite ways to use support and resistance is in this scenario that I have diagrammed on the board here, and that would be, let's say in a downtrend, this would be true in an uptrend except in reverse. In a downtrend, the pair is moving to the downside, it hits a certain level of support, and we can see there's, if I draw the chart out more to the left, you can see other levels of support along there too. But it hits a level of support and then retraces, bounces back to the upside, and then kind of trades around in this zone for a little bit of time. Now, once I see that happening, this is great because you've got the downtrend. I know I want to go in the direction of that downtrend because that's the strongest way to trade, in the direction of the trend. Goes to the downtrend, it established a support level, it established a resistance level, so I can trade this two ways now. The first way is I can go short right here at this resistance level, and I know I'll put my stop right about where that red line is at resistance, just above. because if price action makes it above there, I know I want to be out of the trade at that point. But I place my stop there and then let the pair trade down to support. At the support level, I can do a couple things. One is I could close out a profitable position right at that support level. That could be my first profit target. Or if it breaks through support, then I know it's even a stronger trade because it shows the sellers are definitely in control because it sold through support, took out its old low, and is on its way down to making another low. So we can establish those support and resistance levels in that fashion on this particular trading scenario, and then use them to take advantage of this very high probability trading setup. Another way that I like to use support and resistance levels is with trend line support and trend line resistance. Now, in an uptrend, price action is going to be above our red trend line support. And you can see what's happening here. Every time price action traded down to our support line, our red trend line support line, it bounced off to the upside. So after it does it 3 times for confirmation, 1, 2, 3, as soon as it respects it the 3rd time, at this point, I can trade the pair long with a stop just below my support line. Another way to use support and resistance. In a downtrend, price action would go below the trend line resistance, and what I'm looking for here is the same thing, only kind of flip-flopped from up here, is I'm waiting for price action to trade up to our resistance line. As soon as it does it 1, 2, 3 times, it respects it the 3rd time, now I know I can short the pair. So right here, as soon as it respects it the 3rd time, I can short the pair with a stop just above my resistance line. Another way that we can use and that I use support and resistance levels is in trading channels. This happens to be an ascending trading channel, one that's going up. We also have descending trading channels. Same rules would apply. But once our levels of support and resistance in this ascending trading channel have been confirmed, then I know every time it touches my resistance line at the top, the upper trading channel line here, I can short the pair. When it touches the support level, the lower channel line, I know I want to go long the pair at that point. Also, what I do is I like to use confirmational indicators in my trading, whether it's with support and resistance levels or other types of trading as well. One of my favorite indicators is the MACD indicator, and use your imagination a lot on this diagram of my MACD indicator here. The green line is the MACD line, the blue line is the signal line, and these black lines represent the histogram bars. Now, how I would use this, let's say, for example, I'm looking at this trend line resistance right here, and let's say the trade is right at that point. It's pressing up against, let's say it hasn't done that downturn yet. Let's just say it's touching up against my resistance line. I don't know if it's going to break through. I don't know if it's going to turn to the downside. So to get perhaps a little heads up, what I might do here is refer to a MACD indicator that I would have on that chart. Now, if I see the MACD indicator doing something like this, in other words, the MACD line crossing over the signal line to the downside, and the histogram bars going from being very high and above the 0 line, lower, 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 below the 0 line, lower, 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 that indicates that momentum is waning. Momentum is fading, it's moving to the downside, which would indicate to me at this point that it would be an all right situation to short the pair again at the trend line as long as it doesn't break through and go above that particular line of trend line resistance. So that's how I would employ the MACD indicator along with support and resistance. I hope you found a lot of this helpful and can use it in your trading. And thanks for watching, and good luck with your trading going forward.